This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China has issued its second batch of refined fuel export quotas for 2024, totaling 18 million metric tons, Chinese consultancies and trade sources said on Tuesday. The volume is 2 million tons more than the second batch issued last year and could boost fuel supplies and further depress refining margins in Asia. The export volumes, comprising 14 million tons of refined products and 4 million tons of marine fuel, were allotted primarily to state-owned refiners, according to consultancies Longzong and JLC and the trade sources. The new quota brings this year's total for exports of refined and marine fuels to 45 million tons, following the first 27 million ton batch issued at the start of January.
Oil prices edged higher on Tuesday after Israel struck Rafah in Gaza, while negotiations for a ceasefire with Hamas continued without resolution. Brent crude futures were up 9 cents, or 0.11%, at $83.42 per barrel at 0635 GMT, while U.S. West Texas Intermediate crude futures rose 7 cents, or 0.09%, to $78.55 a barrel. Oil prices opened up this morning, with some roadblocks in the ceasefire talks between Israel and Hamas leading market participants to price for geopolitical tensions to potentially drag for longer, said Yeep Jun Rong, market strategist at IG.
Moving on to the top news in the energy sector.
The U.S. has sufficient supply of oil in the Strategic Petroleum Reserve to address any supply concerns and is monitoring markets on how to use it, Amos Hochstein, President Joe Biden's energy advisor, said on Monday. The SPR is still near 40-year lows after Biden directed the largest ever sale of 180 million barrels from the reserve after Russia's 2022 invasion of Ukraine. The Biden administration recently stopped buying back oil for the reserve as crude has been trading above the $79 per barrel price it wants to pay to purchase oil. We have been replenishing into the SPR for the last several months. I think we have sufficient supply in the SPR to address any kind of concern in the economy if we need it, Hochstein said on the sidelines of the Milken Institute Global Conference.
The United States perceives Iran's capacity to move its oil as being reliant on service providers based in Malaysia, the U.S. Treasury Department's top sanctions official said on Tuesday. Brian Nelson, Treasury's Undersecretary for Terrorism and Financial Intelligence, was speaking during a 4-day visit to Singapore and Malaysia. He also said the United States was seeking to prevent Malaysia from becoming a jurisdiction where Palestinian militant group Hamas could raise funds and move money. Next, we have the top news in metal markets. Iron ore futures prices rose on Monday as investor sentiment was bolstered by China's efforts to revive its struggling property market, and an expected wave of restocking from steelmakers after the Labor Day holidays. The most traded September iron ore contract on China's Dalian Commodity Exchange ended daytime trade 2.63% higher at 896 yuan, $124.21, a metric ton, the highest since March 7. The benchmark June iron ore on the Singapore Exchange was 2.05% higher at $119.45 a ton, as of 0823 GMT, the highest since April 25.
Lead prices in Shanghai surged to near their highest in 6 years on Monday, driven by a supply tightness in top consumer China and hopes for further economic stimulus that could bolster demand. The most traded June lead contract on the Shanghai Futures Exchange jumped to as high as 17,790 yuan, $2,468.81 per metric ton, a level unseen since July 2018. The contract was up 0.9% at 17,665 yuan a ton by 1551 GMT.
We will now look at the top news in the agricultural sector.
The U.S. Department of Agriculture, USDA, weekly crop progress report showed 50% of the U.S. winter wheat crop rated in good to excellent condition, up 1 percentage point from last week and the highest for this time of year since 2020. The relatively strong wheat conditions align with forecasts for a shift in global grain supplies to surplus, compared with the shortages of the past several years. Drought conditions eased last week in portions of the U.S. winter wheat belt. As of April 30th, some 28% of U.S. winter wheat was located in an area experiencing drought, the USDA said last week, down from 30% the previous week.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at Trade Flow News, which allows you to watch our program on your mobile device or desktop to receive information from there.